Hello, everybody. How are you doing today, tonight, whenever you are watching? Welcome to the Kingdom Builders Credit Repair TV show and the KBCR podcast. We are so excited that you are here today. Thank you for watching. Listen, before we get into today's message, we want to make sure that if you are joining us for the first time, that you go ahead and hit that subscribe button so that you will never, ever again miss another episode of Credit and Financial Tips with yours truly, Michelle Green, aka KB Michelle Green everywhere. Listen, we want to make sure that you are informed, that you are educated on these financial and credit tips. We want to teach you all about the credit game. That's what we are about here at Kingdom Builders Credit Repair. So go ahead right now. Let's just pause for a second and allow you to go ahead and sign up for the KBCR TV show and the KBCR podcast. That's right. We want you to subscribe. We want you to like and share. We want to make sure that we are answering any questions that you have. And if you're already a part of the KBCR podcast or the KB Kingdom Builders Credit Repair TV show, thank you for being a subscriber. Thank you for joining us, connecting with us, collaborating with us. Thank you so much, because we would not be who we are without you. That's right. Woo! So give yourself a round of applause for being here and for connecting and collaborating with us. We are so excited. Listen, today we are going to be talking about mortgages. We are going to be talking about housing and the whole arena around having a mortgage, because there are so many people that come to us all the time as it relates to being able to buy a house. And we want to make sure that our clients, as well as those of you who are watching that are viewing us, we have, I don't even know, but I know that it's been recorded on our CTR Media streaming network, that we have had over 40,000 viewers listen, and they on their network stream to 3.6 billion, that's with a B, billion viewers every single day in over 175 countries. So we want to make sure that everybody, no matter what country you're in, no matter what situation you're in, no matter what background you came from, that you are educated on credit and in finances. That is our specialty. Listen, I've been doing this for over 30 plus years, so it's not like something that I just started doing yesterday. I want you to know that there is a lot of experience and a lot of wisdom that has come into this organization, Kingdom Builders Credit Repair, and we are so grateful to God for what He has given us. So listen, you are in for a treat today if you are in the consideration of buying a home, because we are going to talk about what it takes in order for you to get a mortgage, and not just get a mortgage, but also when you're in a position to where you want to sell your house. We're going to talk about the ins and outs. We're going to talk about the do's and don'ts. But before we get into that, what do we do every single week? We talk about what credit is, because we don't want to be under the impression that everybody knows exactly what credit is. We want to be under the impression that maybe there's somebody that's listening today that has no clue what credit is and how to manage their credit. So what we're going to do is we're going to talk about right now what credit is. Credit is your ability when you don't have enough money to pay for something that you want to buy. Then guess what you have to do? You have to have a good enough reputation, and you have to have a little bit of an income in order for you to gain a reputation to get credit. So credit is your ability to go to a financial institution, what we call a creditor or a lender of any kind, that is going to lend you the money and allow you to pay it back over a period of time in what we call installment payments. That's right. We are going to go to a financial institution, and that financial institution who has some money is going to lend us that money that we need to buy the thing that we need or the thing that we desire. So we are going to go to those creditors and those lenders to get a car, to get a house, to get a credit card, to get maybe a department store. Maybe we like to shop at a particular store, and we have the ability to be able to gain credit when someone offers us credit, especially at a department store or any other place, or even just us in need of something that we don't have today. So when we think about credit, I want you to always remember that it's your ability to be able to build up your reputation for you to gain credibility with a lender or creditor that does have the money that you need in order for you to be able to buy the thing that you want over a period of time. Now, the thing about credit is that at the end of credit, no matter what type of credit that you purchase, at the end of it all, you will own the item. So, for example, if you are trying to purchase a vehicle, by the time you pay off that loan, you're going to own the vehicle. So, you'll be able to do whatever you want to do with it. And if you have a credit card, a lot of people get confused on credit cards and department store cards. But if you have a card of any kind, you will have the ability to own that particular card. So the card belongs to you, whether you put money down on it as a security deposit, or even if they gave you the money in an unsecured card, which means that the bank or the financial institution decided to lend you a credit limit and then possibly increase that credit limit later so that you can gain a higher amount of money to borrow and you can have access to be able to utilize more credit than what you initially started out with. That's the whole game of credit. Either you're going to have something that you own that is a loan of some kind where you're paying in installments, or you're going to have a credit card of some kind that you're paying in installments. But you're going to have one or the other. And regardless of the kind of credit that you need, regardless of the kind of credit that you desire, it all boils down to your reputation and how well you're going to do as it relates to paying the people back that have allowed you to borrow the money in the first place. Because we work, right? We have jobs, we have businesses, and we work and we earn a living. And as we're earning a living, there's always not going to be enough money for us to have in order for us to do the things that we're trying to do, right? So we don't have enough money set aside. Most of us don't have enough money set aside to pay off a whole mortgage, $300,000 to $500,000. Most of us don't have enough money set aside to even purchase a vehicle. So if we're looking at 20 to 50,000 or more, we don't have that kind of money just laying around. So that is the reason why it's so crucial for us to understand how to manage our credit. We want to understand what credit is, how do we gain it, and we want to understand that we need to maintain that credit. Regardless of the situations and circumstances that arise in our life, I want us to understand that we still have to have a commitment to pay on the things that we are given as an allowance to get a loan, to get a card of any kind, and pay it back over time as it relates to credit. We have to decide that we are going to be disciplined enough that we are not going to fall short if we have death in the family, if we have a divorce, if we have a baby, if we have a marriage, if we have a graduation, whatever the scenario may be, regardless of what is going on in our lives, we have to have a commitment to pay back the debt that we owe. Because when we pay back the debt that we owe, no matter how many accounts we have with how many different creditors, it gives us the ability to always have this open opportunity for us to be able to have the things that we really want. If we do not pay our debts back, if we do not understand that after we own something, it only comes about after we paid it off, then we will never be in a position of ownership. So let's just start there as we're going into the subject matter of mortgages. So I want to talk about mortgages because a majority of our clientele that comes to us for credit repair is not just coming for any old reason. They are coming for the goal of either purchasing or selling their home and getting another house. So I want us to understand what that procedure is supposed to look like as it relates to credit. When we think about credit, as I just stated, we first have to have some discipline to understand that we cannot just borrow money and not pay it back. We cannot just get a creditor to lend us the credibility of a loan or a card of some kind and decide that we are just determined that we're never going to pay them back. I know that's kind of the mindset around our whole financial portfolio, but we have to change that if we are serious about buying a home. So I want us to begin to look at first the patterns that we have around paying people back. First, let's look at the pattern around how much debt have we accrued? How much debt do we actually owe? What are our balances? And how consistent have we been in paying back those balances? How consistent have we been in actually owning the debt that we have said that we want to borrow? We want to borrow temporarily so that we can own it at the end of the day. So, as it relates to a mortgage, I want us to understand that the first and most important process of you being able to buy a home is understanding that you have to be disciplined in order to get to the purchase of the home and any other type of credit that you want to own. So, when it relates to credit, we want to understand that there are three major components to buying a home. The first component, of course, is credit. Your credit score really needs to be around a 660 to 680 for you to really get the kind of house that you really want. In addition to that, you want the 660 to 680 because as it relates to your credit, what happens is if you have the 660 or 680, you will be able to not just get what you want, but you'll be able to make sure that you're covering anything that may occur while you're in the process for the underwriting department to approve the loan. Now, the underwriting department is very important as it relates to the home buying process. They are the department that's going to go through your finances, all of your bank statements, all of the things that you need in order to purchase a home. They are going to check it out and make sure that you are legit. They're going to make sure that you are who you say you are. They're going to do some background checkups. They're going to make sure that the house that you want to purchase is intact. So there is a lot of procedures that come into play with underwriting. And you need to know that the underwriting department is the big dogs that determine whether or not that loan is going to go through. Okay, now there are, of course, some other components to buying a home, but the first thing we want to understand about home buying is that we have to have the right type of score. Our scores need to be a 660 to 680 and not necessarily a 620 to 640 because those are the bare minimum scores that we would be at in order to just get our foot in the door. But let's just say in a scenario that something happens, like a collection decides to pop up on your credit all of a sudden while you're in the process of closing on the home, then the credit score will take a hit of anywhere from 10 to maybe even 50 or 60 points. So, do you have the ability or the cushion to be able to catch your credit score if there is something unexpected that pops up on your credit at the last minute, at the last hour of you being able to make the purchase of the home with underwriting? So, that's why I say, even though, yes, you can buy a house at a 620 to 640 credit score range. However, if you are protecting yourself and understanding how the credit game can fluctuate, how your scores can go up and down, then you would understand that you will also need to improve your scores just a little bit more than just the bare minimum so that in case anything happens, you are good to go. You're not dependent on the credit score minimum. You are going to max that thing out to the highest amount of credit that you can possibly get. Now, of course, the beautiful thing about having a 700 credit score is that's taking you over and beyond the average score for you to be able to get a house. So we want to make sure that you are getting that that idea in your mind right now that you don't want to just barely be able to scale through that whole credit score equation of a 620 to 640. You want to be able to cross on over to the 660, to the 680, and even the 700. And when you get to 700 and 720, that means that they're going to roll out the red carpet for you, because you're not going to have any problems with the major foundation of being able to buy a home. That's the first thing. So the second thing that they look at as it relates for you to be able to purchase a home is that you have to have the income. So what does your income look like? Have you tracked the income over the last 24 months of how much money you have actually earned? If you are a couple, a married couple, and you are looking at going into buying a home together, or if you have a significant other and you both want to go into buying a home together, if you are a parent and child, or if you are just some friends that have decided that you want to go into home buying together, listen, I would advise you to seek counsel first, which means that you need to come on over to Kingdom Builders Credit Repair so we can advise you on how that process would really pan out over time. But if that is the situation and you want to buy with someone or you're buying individually, you have to understand that the income is a major deal as well as the credit score. So if you are trying to buy a house, you want to calculate your income over the last 24 months, which is 2 years past. And you also want to make sure that you have consistency with that income. Not only do you want the consistency with the income, but you want to make sure that you have made at least enough money that's going to be about 3 to 5% of the house that you want to buy. So in other words, if you made $100,000 in the last 2 years, which means that you would equal to $50,000 each year in the last 24 months. So that would mean that you have $100,000. You could probably afford about a 300 to maybe $350,000 home or more. You could probably afford, even if you want to push it out just a little bit, probably up to about a $500,000 home. Because as it relates to how much money you make, you want to have a comparison or a percentage of what you make to see if you can actually afford to buy the home. So the income is going to be a major factor. How much money have you made in the past 2 years? And have you been on the same job for the last 2 years, so that they can make sure that you are consistently going to be able to pay off the mortgage after 20, 30 years or more, depending on if you do refinancing, a home equity line of credit, and that's a whole different conversation for another time. But for those of you who do know, you know, okay? But we want to make sure that you have the income. We want to make sure that you have enough income and that you are consistently proving on paper if you are making the actual money. So if you are an independent contractor, if you are a business owner, you need to have a business account that shows the income going into the account. If you are an independent contractor, you need to do the same, because you're considered to be what is called self-employed. Also, your credit report should reflect that information. If you are a person who is self-employed or business owner, then we need to know on the credit reports that that is what your income is coming from. And we need to see that everything that you are telling the lender, the creditor that is going to finance your property, that you are telling the truth. So it can't be that you say, I make $100,000 in business, I am a self-employed independent contractor, and I make $50,000 to $60,000 a year. You can't just tell someone that and it's not proven on paper. So how do we get the income proof on paper? Number one, we're going to pull that information, or rather the underwriting department is going to pull that information from your bank statements. So be prepared to submit your bank statements as it relates to your income. Secondly, you're going to need to prove this income through what you put on your taxes. So I advise you guys that are employees and especially an independent contractor or a business owner that you need to make sure you're making money on your taxes as well as in your bank account. So your bank account and your taxes should actually equal the same amount, or at least as close as possible that you can think of when it's time for you to submit your tax paperwork. So number three, in order for you to buy a home, you have to have the taxes completed for the previous 2 years from the year that you are purchasing your home. That's right. You have to have the proof of the taxes. You cannot walk around and just say, I made this money and yeah, it's in my bank account. It's on my bank statement, but then you did not file your taxes to make it seem like you made that kind of money because maybe you didn't want to pay back any taxes for that year. Listen, we got to change the way that we think. We cannot decide that we're going to purchase a home and we're still going to take the shortcuts that we thought we could take for the rest of our lives, because we can't do that as it relates to really going up the ladder and accruing wealth in real estate. We have to understand that in order for us to position ourselves properly for home buying, not only do we need to have our taxes taken care of, but we need to understand that we even have to have what is called your down payment and your closing costs. You have to have some money set aside to prove that you can handle the first mortgage, that you can also close the deal on any other fees that are necessary for you to actually buy a home. So what are those fees? Let's talk about it. When you initially go into buying a home, the major thing is that you have to go under contract. Contract is an agreement that you're making between the seller of the home and you, the buyer of the home. So the contract may mean that there are some repairs that need to be taken care of, and either you are going to take care of it by buying the house as is, or the seller is going to take care of it, and that is the agreement in the contract. So it depends on the house, and every house is different, just like everyone's credit is different. And when it relates to you getting that contract agreement, that is a part of the process of underwriting, completing your closing costs. So in order to buy the house, we have to lay out the foundation of everything that may need to be repaired. If there is a repair that you are going to buy, or if there is a repair that the seller is going to pay for you on your behalf for buying their home, all of that has to be in writing. So that's one part of it. In closing costs, you have to get an appraisal. You have to have someone that's going to appraise the house and tell you how much the house is actually valued at. So we call this an appraisal. So you have to pay a separate fee for a person, an individual, or a company to come out and appraise the house. And then you have to get an inspection on the house, which is also different from you having to pay these closing costs. You have to get an inspection because the appraisal is just the value to show you how much your asset is going to be, but the inspection is actually going to tell us what exactly is wrong with the house and how much it's going to cost in order to get it fixed, in order to get it up to par where it's livable, where it is not a problem with making sure that the issues that it has are resolved. Okay, so we have to look at, when we are looking at closing costs is all of the things in one big bundle that has to be taken care of. Now, another thing that we have to look at for home buying is being able to have a title search done. A title search is necessary because we want to know and make sure who owns the property. And we want to make sure that we're not crossing any boundaries for anyone who owns the land that the house sits on. So a title search is necessary because sometimes there are scenarios where someone may own the land, but the house is owned by a different owner. And when that happens, then we have to make sure that everything is agreed upon before the house can be sold. So a title search is very necessary because you wouldn't want to buy the house and have to consider selling your house to the people who own the land that the house sits on because you didn't do the proper title search. So we have to have a title search to understand, because we don't have the ability to pick up our houses and move them to another piece of land. We want to make sure that we are buying a property from the proper seller, and that the land that is attached to the property that it sits on is also going to be something that we own. And especially in the event that you are buying a home that is in a particular subdivision, if you have homeowners association fees that are included in the property and the land package deal that you are buying, then that also can be a part of the equation of this title search. That can be a part of the equation of making sure that you are getting the right amount of closing costs and all of the things that need to be checked off in order for you to make the purchase. So I want you guys to understand that home buying is not just a simple process as it may seem. There are a lot of components that go into home buying. So prepare yourself by making sure that you have a down payment and a closing cost, which is usually going to run anywhere between, I would say, $10,000 to $15,000 or more, depending on the amount of the total asset that you are buying. An asset is something that appraises in value. That means that if you buy the house today at $300,000, tomorrow it may be worth $400,000 or $500,000. So you have to understand that you're not just buying something that's simple and easy. A mortgage, as it relates to the credit industry, is the highest type of debt and the most valuable asset that you could ever buy outside of commercial property. So when we look at real estate in the whole industry of real estate, no matter if it's a townhome, if it's a mobile home, if it's a modular home, if it is a mortgage like a commercial property, if it is a actual residential home, a multi-family home, regardless of the type of real estate, you need to know that you are buying something that is most valuable to your wealth and your finances, and especially your credit. So don't just take it lightly that you were able to purchase a home if you already have a home. Don't just take it lightly that you are being able to purchase a home in the future of your credit lifeline. Make sure that you understand the importance and the value of the asset that you are getting ready to buy, and make sure that you prepare by saving enough money, by making sure that you understand your appraisal, your inspection, your title search, and any other homeowner association fees and any other fees that may be included in the contract agreement before you can actually completely close on the home. Make sure that you have your taxes done in the last 2 years, and make sure that you show proof of your income that you actually earned those dollars, okay? Those dollar bills. Make sure that you have actually received proof that you have earned that money by your bank statement, by your taxes, and also by your credit. And as it relates to your credit, of course, your debt to income ratio cannot be totally upside down when it comes to how much debt do you owe altogether if you want to buy a house. And let me just say this. If you are really serious about buying a home, go over to Kingdom Builders Credit Repair right now. Go down to the bottom of the website and click on Let's Talk. Put in your information and let's schedule a time so we can get you into the position of being a homeowner or selling your home and purchasing another house. Listen, we are here for you. We have connections with real estate agents, with brokers, with lenders. We have connections with inspectors, with appraisers, with title search people. We have the connections that you need in order for you to be able to have a smooth process of being able to buy the house that you need. And yes, we can help you with the taxes, we can help you with the credit, and we can help you to build up that income to where you can buy your actual dream home that you have been so dreaming about for days and months and years, even that it can finally happen for you. So don't hesitate today. Make sure that you go to Kingdom Builders Credit Repair website and you can give us a call or you can email us. Either way, it matters that you get in the room for KBCR. We are so thankful that you have watched this episode of KBCR TV show and the KBCR podcast. And until next Friday at noon, we will see you then to tell you some more credit and financial tips with yours truly, Michelle Green. Thank you again, and we'll see you next time.